Radio.
You're listening to Cryptocurrent, the only podcast that explores the bold projects, exciting opportunities, and the growing reach of blockchain and cryptocurrency. Whether you've got skin in the game or you're just crypto curious, keep an open mind, enjoy the conversation, and stay cryptocurrent. Now here's your host, Richard Carthon.
Hello, everyone. Welcome to an episode of Cryptocurrent. Your host here, Richard Carthon. And today I got a special guest all the way in Mumbai, India. We got Pankaj Balani with DeFi Exchange. How are you doing today?
I am very good, Richard, and great to be here and great to be interacting with you and, talking to your listeners.
Oh, absolutely. And I'm excited for the conversation today. We actually spent some time before the podcast just to catch up and speak on some various stuff and got a lot to unpack to you, especially with everything going on in the world, in the economy, the crypto space, COVID, all the things. But before we do that, I want Pankaj to first tell us a little bit about himself. Give me a little bit of background.
Sure. So I am CEO at DeFi Exchange. We are a cryptocurrency derivatives exchange. We have futures listed on Bitcoin and about 30 altcoins. That's how we are different than most other derivative exchanges out there. We have more futures listed on, more number of altcoins than any other exchange. And for example, BitMEX has about top 8 coins on which you can trade with leverage. Derivate has 2. DeFi Exchange, like I said, has 32. So
wow.
We have Tezos futures, Atom futures, Link futures, and we have had them for over a year now. We're 20 months old, so we started our operations in August of 2018. We've been in business for this long now, and we were the first exchange to come up with BNB futures. So that was as early as October, November of 2018, when nobody was even talking about leverage on altcoins beyond top 5-6 names. So then we brought about Leo futures, which was in June of 2019, which was within a week of Bitfinex opening up Leo for trading on spot. So that got us a lot of attention, that's why customers come to us, because they don't get this altcoin derivatives anywhere else, and things
Right.
that we offer are quite unique to us.
It's very unique. Yeah.
We are also the only exchange to offer move contracts on Bitcoin and Ethereum. Move contracts are basically options, which are like at the money straddles, and they are a way for people to trade volatility. So if you want to trade volatility on Bitcoin or on Ether, you can trade them on DeFi Exchange using move contracts.
Which is very unique, and I think is really, really cool about the exchange that y'all have. It's the first that I've heard that's that robust. And the fact that it's robust, it makes a ton of sense because you told me a little bit about your background, and not to go too deep into it, but can you just give our listeners just a little bit of background of how you got into the space and your background in the banking system and with the co-founder and everything else? I think it'll make things a little bit more clear.
Sure. So I come from a derivatives trading background. I have worked with large-scale investment banks globally. I used to be part of UBS Investment Bank in Hong Kong on the derivatives desk, and was very lucky to be on one of the largest Asian equity derivatives desks globally. So I have traded derivatives for about 6 to 8 years, partly at UBS, and then setting up derivatives business in India for a London-based bank. Have good understanding of global markets, macros, and derivatives in general. Then my other co-founder used to work with GIC in Singapore and Citi in India as an investment analyst. My third co-founder comes from the background of making technology for scale. So he built his first company in India, a food tech company, became the largest food tech company in India, then sold it off, had investors like Sequoia, Matrix, and others. Then went on to work for a company called Hotstar, and became and was head of engineering and director of engineering and head of machine learning there. So Hotstar is really interesting because it's a video streaming app. It has about 400 million subscribers. So roughly 1 in 3 Indian is a Hotstar subscriber, right? 1 in 3 Indians. That is huge. And their subscriber base is bigger than Amazon Prime, Hulu, and Netflix put together. So that's the scale that they handle. And let's talk about how much concurrent scale they handle. How many people are using Hotstar together. So we have cricket in India. It's really popular. And
Hmm.
we have about 1.3 billion people. Uh, all of the entire country watches cricket. And when we have the cricketing season, they have a traffic of about 20 to 25 million people concurrently streaming data in real time. So they support about 2% of India's population concurrently. And that's the scale Saurabh is built for. So that we're
Yeah.
very proud to have that kind of scale in our, that kind of ability in our team to have built for that scale. Because our markets, financial markets, crypto markets, they're all about being
You
able
need
to
it.
handle scale,
Oh
right?
my gosh.
Yeah,
And we're going to talk about this very soon, the importance of scalability. I mean,
absolutely.
this kind of feeds you into the next question. Just the flash crash that we saw recently, when the crypto market depleted almost by 40-50% in a day. And I think some of it can be attributed to some of the exchanges that are out there that couldn't scale with the amount of orders that were coming in, and people were getting locked out of their accounts and everything else that you hear about that. So I'm sure that you can speak to that with your own exchange, but then too, can you dive into what you think really occurred with all of that?
Sure. So yeah, right point. Whenever there is stress in the system, whenever there's so markets are all about concurrency. Whenever there is a big news, everybody will rush into their systems to access their positions, and exchanges need to be built to be able to handle that kind of concurrent scale. Like too many people coming at a single time, and this is what happened at BitMEX, right? That largest exchange, but again has had problems with scale for some time now. And when market was moving fast, their system was liquidating more and more people, and they could not just take any more requests. They already have a queue system where they don't take more requests than a certain number, but I think their queues were running continuously full, and people were locked out for about 40-45 minutes. And you know what? Even Binance had issues, and Binance regularly has issues with scale. So, the, when we talk about spot exchanges and when we talk about derivative exchanges, the problem is a lot more complex. And the reason I say that, I'll come to that in a minute. So, Binance did a very good job with its spot markets. Like 2 years they've been in business, super very good exchange, rarely has any challenges. But since the time they've brought on margin trading first and derivatives now, their exchange also starts to have problem, because not because something is wrong there, because it's a very complex problem to solve. I
Right.
mean, imagine that you have okay, whenever there's a spot trade, what happens is a buying and selling, right? So you buy, I sell, a transaction is done, and then this transaction is not looked at again. But whenever we do a trade in derivatives, let's say you buy, I sell. Now I have a short position, you have a long position. Now each of our positions are going to be continuously margined with every tick in Bitcoin. When I say every tick, I mean every movement in price. So every time there is a change in price of Bitcoin, position of each and every customer is margined again to see if it is in liquidation or not. Now imagine doing this for number of customers, for prices moving really fast on highly volatile asset classes. And BitMEX, it's still 8 coins. For Delta Exchange, we have like 30 coins, right? So doing it over 30 coins for every customer, if all of our customers have on an average 3 to 4 positions, we have to margin each and every position for the every customer in real time, with prices moving differently for every asset. So it's a
Right.
very difficult problem to solve. And
It's a lot at
honestly,
once.
yeah, this is a problem that even CME and NYSE has not solved in the past. None of the traditional exchanges have solved this problem. Okay, look at it. CME has about 200, 250 underlyings on which futures are trading concurrently, right? Same with the other stock exchanges that offer single stock futures. They have a bunch of these futures contract on single stocks that can be as high as 200 to 300. Then why do I say that having futures on 100 coins is a lot more challenging? The reason I say that is because in our market, there is no circuit breaker, right? So we don't
Right.
stop trading. So in markets where there is a circuit breaker, and now with the last week, everyone knows what circuit breakers are. So because you have a circuit breaker, you don't let the price move by more than 10%. Because you don't let the price move by more than 10%, if you have margin which is more than 10%, you don't need to be worried about liquidations, right?
Mhm.
So you don't margin in real time. You margin at the beginning of trading and at the end of the trading. And in the real time, you don't margin again. So when you start trade, I tell you, look, it's $100 position. You keep more than $10. I won't let the losses be more than $10, because if the price moves more than 10% away, I'll stop trading. In cryptos, that's not the case. We
No.
margin real time, right? We don't have any circuit breakers. So traditional exchanges are built with the premise of circuit breakers, and that is why traditional exchanges will have a lot of challenge coming into crypto markets and solving the problems for crypto space. So again, technology wise, it's a super challenging problem to solve for 100 altcoins on which you have margins, on which you have derivatives at high leverage and very high volatility. Your system needs to be very robust to be able to handle the kind of load that it will be. So long answer, but yeah, I
No,
think
no, but it very important to unpack just the scalability issues that are there that are still being dealt with. And I think you did a good job of painting all of that picture.
let's
And then
go.
kind of go
Yeah,
ahead.
no, you were saying, go on.
I was just saying, but kind of weaving back to one of the other like part two of the
Yes.
original question was how is that how does that correlate to what we recently just saw in the market with everything in crypto kind of just taking that big hit in that over the course of 2 days?
Yes. So let's look at what happened. Okay, the seeds for all this were sown a long time back. Everybody was really bullish into the halving rally. The
Right.
market was 100% certain that there's going to be a halving rally and the price is going to go up. Everyone had different targets. I knew certain miners who were as bullish as 15,000 by April end. Others were, close to 12,000, but everybody was sure that we are going to breach 10,000 mark by halving, and people were really bullish into the halving. So what that did, that made the system over levered. Traders were long. Everybody was sitting long into the halving, hoping that the prices will go up and the positions will make handsome gains. But more importantly, miners were sitting long. So miners had stopped selling their bitcoins that they were generating. Instead, they were using the bitcoins that they were generating to take out loans. So if I am a miner, I generate bitcoins, I pledge them, I take out a fiat loan because I know that the value of collateral is going up and I'm better off selling them close to halving. So then I finance my operations with debt. So
Hmm.
I'm bringing extra leverage into the system. Or if I have to sell my bitcoins, then I go and take a position in bitcoin futures as long position, so that if bitcoin price goes up, I am still able to profit from the price rise. I personally know miners who were buying call options as early as September, October last year in anticipation of a halving rally. So this was like 9 months out back then, right? And people were buying call options at a very high implied volatility because they were so bullish on price breaching 15,000. Some of these options
Right.
had seen strike prices of 15,000, 20,000. So everybody was really long. And then there was a shock from coronavirus. And the shock was also very quick, right? The way this crisis is different is because till the last week of Feb, everybody thought it's a supply side crisis. That, okay, Wuhan in China, it's a problem there and it will never affect us. And then when things started to go bad in Italy and US, people realized, no, this is much bigger. This is a demand crisis now, which means that there's going to be no sales, which means there are not going to be any earnings, and which means that markets are going to take a big hit and the global economy is going to take a hit. So once people factored in the demand shock, people started to sell off assets and all the assets took a hit. So did Bitcoin. So Bitcoin price, which was hovering around 8,000, started to come down, and then all the leverage that was in the system, all the bitcoins that were pledged against dollar, because they were going to, the price was going to rise in the halving, they started to go into liquidations. So
Yep.
if you see the sell-off, there was a sell-off on both futures exchanges, but before that there was a sell-off on, spot exchanges, Binance, Huobi. Coinbase, all these exchanges, Bitcoin was selling off. And once the spot started to sell, the futures position also started to come under fire, and they started to get liquidated. And once the liquidation started on futures side, because a lot of particularly a lot of participants, particularly the bigger ones, they use cross margin, where most of the position is at a very high leverage. And for BitMEX, um, the cross margin limit would say that up until 100 bitcoins position, you only need 0.5% of margin. So when the liquidation did go to that point, it just started to uh, escalate very fast. So for every
Mhm.
0.5% move down, another big chunk of position would come into liquidation. For every 0.5% down, another big chunk of position will start to come under liquidation. Now, what that did was a cascading effect. It was like circular, a vicious cycle.
Oh, yeah.
So we
It was
just,
just going to keep
yeah,
going.
we just put too much pressure on the market too fast, and in that, BitMEX had to shut its system down. They did it deliberately, or it happened because of the traffic or load. But yeah, that shutting of the system, in my opinion, might have helped the price recover, because sometimes when these things happen, price just gets sold down very fast, because before buyers could react to it, it just moves so fast. So imagine, you decided at 4,400, this looks a bargain, let me get in, and suddenly before you could transfer your money, it was 39. And then you start to doubt yourself, right? And so people who are bottom fishing and people who are giving support to the price, they shy away, because they don't want to register a mark to market loss of 20% in 20 minutes. So that is, that's a kind of fear. And look at the numbers, they'll tell you how much fear there is in the system, or there was
Yeah.
at least 4 days back. So the June future, which represents basically, how is the price of Bitcoin looking at in the futures market for the June expiry? That was trading at about 5% discount to the price of Bitcoin in the spot markets. So spot market price is say 6,000. June future was quoting as low as 5,700. Now it's
Mm.
quoting at 1.5% discount. That is also way too high, but 5% was like too much. It essentially means that market is giving you 20% interest rate, negative interest rate on Bitcoin, right? So how does that work? So if you have one Bitcoin today, if you sell it for $6,000, and if you buy the June future at 5,700, then you have the same profile, right?
Yeah.
In June, at end of June, the price of Bitcoin future and price of Bitcoin is going to stay the same. So you could have actually sold all your Bitcoin, got into a future, and registered a 5% gain. We got a bunch of our institutional clients into this trade, that look, just sell your Bitcoins right now and go long in futures. Now this also provides a support to the market, right? Because people become buyers of futures, so the price between futures and spot starts to converge. But it's a typical indicator of how much the market is bearish or bullish. So this number, the amount, the percentage points future is in premium or discount on the spot. This was about 3% in the beginning of the year, or as late as mid February, and it started to go negative 5% in the
The future spreads were just getting absurd, huh?
Absolutely. 13th of March, the fear, 13, 14, there were so many opportunities, but there were just no takers. And finally, yeah, people did come in, because these are arbitrage trades, very low risk. And now, as we stand, future is only 1% or so in discount to the spot. So
Yeah.
yeah,
No, thank you for that answer. And it just goes to the power of what cascaded and all the factors that happened at once. Because a lot of people, when it all was happening, was trying to figure out like, are we at the floor? We're at the bottom. Like, how's this happening? Is it like directly correlated with what's going on in the regular market and everything else? And I think it had everything to do with what you just said. With everyone was long and they got liquidated all at once, and so everything just happened quickly, and there was nothing other than trying to play catch up to see how far down it was going to go. Because
yeah,
I mean, I think people, and you even saw when it finally hit the floor, when it shot back up as quickly as it did, was because people probably put in buy orders way down where they thought it could happen. And like once they finally hit, the market just bounced immediately back and they're like, okay, here's our consolidation. So
So in these kind of markets, right, that sell off very fast and way too much. So the liquidations kind of put Bitcoin in the deep oversold territory, right? Now
Hmm.
there would have been some smart money who would have thought, look, this is a bargain. Let me get in here, right? At least get in the futures if not in the cash. Just buy future at a discount. So once the price starts to bounce, it bounces really fast because
Right.
then it's a FOMO amongst the smart money that look, this was oversold. It's going to catch up. Let me get in there.
Yep.
So
So just in the short term, to kind of shift gears a little bit, where do you see the crypto market being in the next couple of months? Now, with everything, with Corona unfolding, with everything else just transpiring in the market, the global economy just kind of taking a giant punch in the face right now. What do you see happening in the crypto markets?
So this is going to be a very new time for crypto markets and a very good time in my opinion because it's going to, in my opinion, prove to the world that how Bitcoin can be asset which is highly insulated from the current financial system and maybe performs really well in the kind of crisis environment we are in. So first let's look at what is expected to happen on the global markets front. Uh, we've already taken a big hit on the price side on global equities, commodities, everything. Uh, the the way prices have collapsed, the speed at which this crisis has unfolded, the speed at which markets have gone down, this is unprecedented. People haven't seen this kind of thing before. I mean, for markets to come down about 30-40%, it took a few months in 2008 crisis. This time it's
Yeah.
less than it's close to a week.
Fastest
So
turnaround ever, like 20 something days is insane.
absolutely. And if the situation remains like this, if we remain in a lockdown for say 1 month, 2 month, or less economic activity for a month or 2 months, then it's going to contract the earnings in a big way. Expectation is that global economy is going to contract by 1% at least if we are locked down till April end or May end. I'm not sure about the date, but around that, let's call it first week of May. So if we contract by 1%, and this is the same amount of contraction that we saw in '08, prices will fall a lot more. Right now, we have only gone down about 30%. I won't be surprised if the prices of equities fall another, 15-20% if we do hit that kind of economic contraction. Prediction is that China will contract by 5% for the year. And this is huge because China in last 40 years, I don't think would have ever contracted, right? China and India are the markets that you look at for growth. These were economies that were growing at 10% and 8% for a number of years. Looking at these economies, and these are big economies, right? It's a number two and number four economy globally. So these economies going down, this is what provides growth in the world economy. When these economies shrink, they'll be pretty big. So markets will go down, but at the same time, assets that are uncorrelated to the economic system, assets that are uncorrelated to the earnings, usually the safer haven assets, they tend to go up in these kind of scenarios. And this is where I think Bitcoin will also lie. That look. There is not a lot of direct impact of earnings and there's not a lot of direct impact of what happens in the global economy except for the liquidity angle for Bitcoin. Moreover, this is a safer haven as compared to other risky assets. So where do people park
Mhm.
their money? If you park it in cash, then with all the stimulus that is coming in, value of money tends to go down, right? If you park it,
Inflation every time.
yeah. We are already talking about negative interest rates. We are already talking about giving money to people. It's very difficult to say how the effect of that is going to be on the inflation side. But with negative
Especially the
interest,
long term, right? The in the short term, like yeah, it might be a short term fix, but like it's way too soon to be able to see like how far in the future this could really impact the economy. So yes.
absolutely, and that is why markets are falling through a cliff, right? Because nobody knows how long and how deep this is going to be. Is this a 2 week thing? Is it a quarter thing? Are we going to wash out earnings for 2 quarters, or are we saying that this is going to be much bigger and it's going to take a lot more longer to recover? Uh, think of all the small businesses that will go under because of this. Uh, businesses that run on debt, which means that they take out debt. So market, okay, we have to factor in the the fact that last 4 or 5 years money supply has been really cheap, right? People have
Hmm.
taken out a lot of debt because taking out debt was really cheap.
Interest
Now
rates were insanely low. Yeah.
very low. So free money was available. Not call it free money, but cheap money was available. People borrowed. They started to generate earnings. They used those earnings to pay back the interest on the debt. Right now, if the earnings are washed out, the interest payments will not be able. People will not be able to meet their interest payments, which means that they will start to default on their debt. Now, this is not the time when central banks or other banks can come after them and say that, look, don't default on your debt, because what are they going to do? This is a crisis where if they go out and work, the government says don't do it. If they or generally, I don't think people would want to take that kind of a chance. If they stay
Hmm.
at home, then they have no option but to write off the debt. So what is the Fed and the other the central banks, what options do they have? They don't have any option but to write that debt off and to print more money, which is never a good sign for those who have money as cash as reserve asset, because the
Yeah.
value of that money will start to go down. So I think there's going to be and look at the 700 billion package Fed announced. 200 billion out of that is towards mortgages. There's going to be another big round of mortgages going back on the next
Yep.
2 3 months. I was
A lot of
reading,
people defaulting.
yeah, people will start to default, and I think government has already come out and said that no more foreclosures for next 2 months, right? So if
Oh, they're
there's
not
no,
collecting mortgage payments for the next 90 days. It's until July 15th. It's wild.
yeah, so
Taxes too. You don't have to pay your taxes until July 15th. Like the fact that they're pushing all that back, that's huge news, but not in a good way.
yeah, and it might look like a short-term relief that okay, we don't have to pay taxes, but the thing is that's how the economy works, right? Like where do we think government gets the money from taxes, right?
Right.
Yeah, and so this is going to be, all these things, in my opinion, are actually going to reflect as positive for Bitcoin. And
Hmm.
so, okay, there is an angle of the safer asset, safer haven that is there. Along with gold, this is another digital gold currency. We'll come to why it went down if that is the case in a minute. But yeah, the whole angle of Bitcoin, looking at Bitcoin as a currency and looking at Bitcoin as basically a proxy to money, it just will be a lot more healthy monetary system as compared to other monetary systems where the Fed has to intervene and the central banks have to intervene, and then use discretionary calls that look, these payments, they are not going to be collected, or we are allowing people to write off these payments, and we are going to buy back or buy bonds, we are going to buy equities, we are going to buy commercial paper. This is needed, but this also reduces the value of the asset that we are printing, right? So
Right.
in that regard, I think that will be a little positive for Bitcoin. Now, why did it
No.
go down in the first place? Whenever there is a shock, all the assets go down. So if
Yeah.
you go back to '08, and if you see the crisis, right, gold went up in '08, and there's a big story out there that all the safer haven assets go up whenever there is a crisis because the flight to safety. So if you see '08 crisis, bear stearns went down in March. And if you see gold prices between March and September, October of '08, gold prices continue to go down. Only, you know, till week after Lehman crash, there is no bounce in gold prices. Only after that, gold prices start to go up. Because first, money starts to readjust itself. And people don't know what to hold, what not to hold. They just start to take profits off the table. And
Mhm.
everything starts to recede, particularly when things have performed well. So all the assets started to come off, equity started to come off, commodities started to come off, gold started to come off. Gold was 1650, it's 1490 or something. Bitcoin came off. Then Bitcoin was already levered, like we discussed, because of the halving catalyst that was ahead of us. So when it started to come off, it sold off quite aggressively. Now it's starting to bounce. And as this crisis starts to settle in, people move money towards more, there's consolidation that happens. We'll see gold perform well, and we'll also see Bitcoin perform well.
Yeah. And I think that's spot on, just of having a pulse on where the market is, where it's headed, and what's going on. And I think this conversation has been a really good way to describe the current market conditions and everything affecting the price of the crypto sphere. I also think that this could be a gigantic year for crypto because, again, why was it built in the first place? In response to the 2008 recession. So now as we see what's going to unfold on the global scale, how's crypto going to respond? I think it's going to respond very positively. And I think if the world sees it responds positively as well, you're going to see a lot more of world money go into that. I mean, just looking at the crypto space right now, the entire market cap is under $200 billion. I
Yes.
still think very passionately it will easily become $1 trillion market cap, if not more than that, as world economy starts being poured into it. And so, of course, the sky is still the limit with where this can grow to.
Yes, and you had a very good statistic there, right? That look at the market cap of Google and Apple. They are close to $1 trillion, and here we have crypto, and we are looking at it as an asset class, and its market value is less than the value of these companies. I mean, a fifth of those.
Right.
So that's a potential. And if crypto does well this year, if Bitcoin does well, if the prices end at 15,000 for the year or even 12,000, when rest of the economy is not doing well, or equity markets are down 30% for the year, or maybe 40% for the year, then that will establish crypto or Bitcoin as an asset. That's then after that it's through. It will start to get allocation in every portfolio, in every portfolio manager's books, that look, I will start to allocate some part of my money to this asset because it's a real asset that has different qualities and I want some exposure to it. So
Right.
up until now, we don't see a lot of, so we've always had this talk of institutional money and institutional money coming in. There is some institutional money in crypto, but there is not a lot of, uh, money. A lot of it is prop money, which means that
Yeah.
it's personal capital of a rich hedge fund or a rich hedge fund manager. It's not clients' money for which they are responsible for, and they have to answer questions every quarter. So every 30 day, every 90 days, they have to submit a report card to their clients saying that, look, this is why I'm carrying this asset, and that's how it has performed over the last 90 days. So we still don't look at that report card for Bitcoin and other cryptos. That will start to happen. More institutional, more disciplined money will start to come in if this year is good, and if at this crisis we perform well or better as compared to other asset classes. And to your
For
point
sure.
earlier about this is why Bitcoin was built for. It's a
Yeah.
child of crisis, and if it stands this test, it will be really good for Bitcoin.
It'll be huge. Well, again, man, hey, really appreciate all the time and knowledge you've dropped on us today. Before you finish today, what is the final thought that you want to leave with everyone?
So, final thought, yeah, come trade on Delta Exchange. No, watch the market. It's going to be a really interesting time on the way it unfolds. Both on the equity market side, and we have been discussing, for even for crypto markets as well. And but more importantly, this is a very negative time. This is a time when we need to. It's very easy to get discouraged, it's very easy to get disappointed, but we have to remember that, like everything, this should too shall pass. And we just need to be disciplined. We just need to stay inside, see it through, because it's not really that difficult to manage, right, this infection. It's just that we need to be disciplined, and the more disciplined we are, the sooner we get through with this. So yeah, stay healthy, stay safe, stay inside, and take care of yourself and everyone around you, and keep watching the markets. Yes.
Excellent. I think that's a great final thought of the day. What are some different ways that people can connect with you and learn more about Delta Exchange?
Sure. So our website is really simple. It's delta.exchange, not that difficult to remember. So yeah, you can, and on the website, we have all the handles for the community on the Telegram groups and the Twitter handle. Our Twitter handle is also very simple, @delta_exchange. You can find me at @Balani Pankaj. That is my last name and first name. So yes, and we are very accessible. Just drop us a line on the community, or anytime you want to talk to us, you can reach out to us via Twitter, via Telegram. We are very accessible. Happy to talk about cryptos, derivatives, markets, anytime.
Perfect. All right. Well, again, really appreciate your time, and everyone listening, stay cryptocurrent. Hi, everyone. Thanks for listening to another episode of Cryptocurrent. For more information on this episode and all of our episodes, please visit us at www.crypto-current.co. Stay up to date with the latest news in cryptocurrency. You'll receive daily emails Monday through Friday that are personalized and curated content specific to you and your interest, powered by artificial intelligence. Are you an accredited investor looking to invest in cryptocurrency? Crescent City Capital can help. Go to crescentcitycapital.com for more information. If you're finding value in our content, please take 5 minutes to leave a 5-star review and a great comment. Also, please make sure to share this podcast with others. Hello, everyone. I hope you're enjoying the quality of this podcast. I can only thank my amazing producer, Andrew DeRitter, with DeRitter Productions, who has put this together. If you have any podcast, visual, or video needs, please go to DeRitterProductions.com. That's DERITTER Productions.com.
Thanks for tuning in to another episode of Cryptocurrent with Richard Carthon. We'll be back with more exciting developments from the world of blockchain and cryptocurrency next week. But until then, stay cryptocurrent.
Please use available exits now.